Morning traders, welcome to the Traders Lab. I'm your host Tom B. I'm pleased to get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community. Okay, let's get going. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. What we attempt to do here is in the Trader Lab as a community of like-minded traders, and the idea is a forum for traders to come together. There is no cost, and the idea is to leverage the collective experience of this group. So it's a 24-hour, 7-day-a-week chat room. It's open to everyone at no cost, and it is about the business of trading, and it's about integrating Bookmap order flow tools with auction market theory. In other words, how does the market work? Why does it do what it does? And how, at times, subject to you vetting specific trades, do you have a statistical edge to engage with the other participants in the market? And of course, like everything, if you approach this like a business, you may absolutely or potentially have a better outcome than just winging it. The business of trading is very much like gaming. So in the Trader Lab, we approach it like a business. Gaming is a lot of randomness, 100% randomness. However, casinos only play games that have a statistical edge that favor them. So even though the cards are random coming out of the deck and the gambler's play is random, just like in our environment, it's 100% random. But the games, if you want to compare it to that, structured trades or setups, if you only take them where they have a statistical edge, now you're basically running your business like a casino does. Understanding the actual environment you're in, and then developing solutions to operate in a 100% random environment. And most of us don't think of trading as a random endeavor. We think of it as looking for confirmation endeavor. In other words, more indicators, more time frames in order to create more certainty. But if you understand you're in a random environment, certainty is never going to be part of it. So maybe you're trying to solve for the wrong condition because that's not the condition that you're operating in. I hope that makes sense, and that's the basic philosophy behind the Trader Lab, and also what we do in the Trader Lab, and you're all invited. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay. Now, this morning, yesterday was a very interesting day. We got within one tick of our target, which was yesterday's high a day. Let's go just take a look at that. Was here. This was our target yesterday, and we got within one tick. So for me, since that was an upside target, and then we sold off at the end of the day, and we settled here, that suggested to me the possibility that the up move might be over, and that I want to be thinking about the short side. So I came in today initially looking for the gap fill. Take out yesterday's low, get into the gap, and head south of the border, which would be a pretty lucrative trade if it actually came to fruition. However, markets seemed to have a different idea, but of course, I did not know that. So that was my plan coming in for today. So let's get into the RTH Open. Let's take a look at the first trades. And remember, if you have questions, please post them. I'm going to tell you today was not a good day for me and my plan. I started out being upside down in this. Of course, you don't know that until things start changing. So it didn't start out good for me. So that's okay. The thing about trading is you have a plan, you follow the plan, you accept the randomness of it, and then you just either, if you notice change and you define change so you can recognize it, then you have to get back in alignment, or you wait for a trade, or you don't. Whatever it is you do. It's all plan specific. And in the Trader Lab, we have traders, of course, who are on the long side. We have other traders on the short side. We have everybody all over the place. So, and you'll notice we got back, and it looks like we have not quite gotten back to that high. So anyway, let's go take a look at this. And if you have questions, please post them. And thanks for visiting Trader Lab today. So what we have here is RTH open. I see a buy sweep. That puts me on guard. I'm going to be looking for shorts. So I'm looking up here. I have resistance here. This is the ETH. I'm going to put a little line over here, maybe. Hold on one second. Got some too many wires, too many cables, too many things. Okay. So this is resistance. Sellers were here, buyers were here. We broke below. This is too high. So when I'm coming into the RTH, I'm looking at the last place the sellers were active. This is a sell sweep. That suggests rotation up. This is kind of how I look at them. Now, just the fact there's a sweep here doesn't mean it's going to go down. It might mean that we've exhausted and that we're going to counter rotate. Then I get my micro high volume here and I see my seller. So I know now I have too low and I might have too high. So let's look. Now I get my buy sweep. What does my buy sweep suggest? Well, it suggests a rotation down, and then we have resistance here. So let's just go take a look at this thing. There's my resistance. This is a short in the for me in the Trader Lab. Now what I'm doing is I'm leaning against this, and my bias is to take out yesterday's low and fill this gap. And for me, when I was looking at this trade, you know, I was going, well, this is pretty cool. I've got the ETH low and I've got a target at 6,100. So this was the way I was running this trade. Okay. I have the ETH volume point of control over here, which I know is potential support. And then I have the ETH mid. So all of this is on the hit parade for me for the opening trade. Now there's another piece I want to mention to you guys. There's a couple things that can happen if the market is bullish, okay? Now I'm thinking it's going to get into the gap. So I know the market's bullish and there's loads of longs in the market, which means there's sell stops under us. So I was pretty wound up for the idea of the short. Just so you know, that's me coming in. That's my plan. And, you know, whatever happens, happens. So the short is good from here. This is my resistance. There's my test. Here's my buyers. Now I'm going to show you the actual trigger in the entry. And I'm trying, now I know I have support here. I know I checked it here. This is a uncomfortable trade, more uncomfortable for me than just regular trading. There's always a little discomfort because of randomness and operating in the unknown. But I was disturbed because I had my support here. So I thought about it and I said, well, the payoff could be really good, but I'm in balance. So that means I could have two-sided trade here. So I know all these things coming in, and I'm taking my trade. I just have to take my trade. So short is, now here's the trigger. Too high, break. Buyers are here. The sellers are here. The sellers are here, break. So right in here is my volume. So I want to be looking at it to sell. So too high, I'm leaning against this just before the RTH open. I get my seller. And I don't know here, there's your buy delta, but right here, I know I had my sellers up here. So there's a selling iceberg, 11 buy stops come out, and then I break down. Right here is my next volume. If I can't get above here, I have a short. There's another trigger. So I have a triggering structure. And Trader Lab, if you're working on triggers, this is what a trigger looks like. There's your test. This is your short. Your stop is here. And then we need to get below this thing. So for me, I got my trade on. I'm going to clear this and to go down and take all this out. So let's look. So yesterday's low, scale is here. So this is the scale. And now I'm thinking, well, because there's a high probability statistic, we either take out yesterday's high or low. So I'm thinking here, right? So I'm still in my gap fill trade here. And then, so I'm looking for it to get into the, into here. Why wouldn't we take stops out? You ask. Same reason I did. So let's watch. So here I get a sweep and I'm looking for it to break low. I'm looking for this. So I come down here, I tag yesterday's low, and I'm saying this is going to be a really good trade, right? Or not. And this is a problem. I come across here and I'm going, well, this is my resistance because this was my trigger. So right here, you'll notice the reaction right in here. This is okay. I do not like that I've come across the VPOC. This is a problem for me. I'm thinking, this is not good. I have the opening swing high and I can get taken out of here. So, and you can see what happens. Now, so I'm taken out right here. That trade is over. Any questions so far on the short? How we doing? So that was my first trade. I got taken out. So I got a scale. I ended up scratching the trade and then was out of position. So this, remember, this is where my resistance was. Now there's a couple ways you can play this. Now I'm going to show you something that's a bit advanced. And here's what we got going on here. Let me just open this up a little bit. I got to see something. This. So if this is my short, it's resistance. Everything's wonderful. My variable high volume node, by the way, I have to mark this as over here. There's one above, but I'm not going to worry about that one. I just want to get this on here for us. So that is too low. Now, I don't know that at the time until I break through all this resistance and I take out the opening swing high. So this right here, right when I'm here, it's like you start, praying. I don't think that helps in trading, but sometimes you do. So this here is bad news for me because I see this aggression here and I'm going, wow, that's really something. So everything under here was okay. Once I got above mid and VWAP, there was trouble. So you could have been out of the trade here, or last thing is just scratch it out. Now we break through the opening swing high, which is here, there, break high, pull back. This now can become support. Let's look at it. See it? Now, this is not something I really get into too much in the Trader Lab, just too many pieces, that you can have. But if I break out, what is the nature of triggers? Now, this is something that'll get you. If we have microstructure and we have triggers in micro, triggers in micro, if we're doing something on a higher time frame, if you will, or fractal, if we break out of it this way, then might we, and we break out of it here, I think, might we come back the same way and test it from the other side? If this is balance, this whole thing is a big balance area, and we come out the top, can't we come back and check it? I mean, we could come back here and check it, but we came here. And one of the reasons why you might consider a long is because everybody's stuck and the sellers failed. Because it's if this, then that. If not, then what? If this is a short, if this, then that, and then break, right? That's my trade. If not, and you don't know until you're starting to come here and you see this buying, if not, then what? Then you're going to get run over or stopped out of your trade. If you're in Trader Lab, you would have scaled, so you'd be risk neutral. So you scratch the trade and your broker sends you a gift basket, and then you pull back. Now, right here, forget our resistance was up here from the ETH. So you know you got resistance here and you got resistance here. Notice how it stops here. This is how the auction works. Now, so if this is too high, I get resistance. I get resistance. I pull back. I break out. Now I'm looking for a pullback. And I can use that or I can use this. But I have to break this. So here you see I haven't broken it. So I have resistance, I have support. I break out, I have support, and I have support in here, volume in here. So I have this, this, this for longs if you want to vet it. So let's watch. See it? Notice the structure. Is everybody following the long? This is something a bit different. How are we doing in YouTube, and how about the Trader Lab? Trader Lab, are you taking note of this structure? I don't know if I've shown this before. I do sometimes, but I don't want to add more to the mix. The more you add, you have to spend time with these ideas. So now we get our long, and where we're trying to go now is, where's the overnight high? I hope I didn't miss it. Hold on. I think I have missed it. Guys, overnight high, is it covered up? I think it's around 20, isn't it? Wasn't the overnight high like up here someplace? 1975? Okay. So let's call this the overnight high, basically. So our next target is 1975, overnight high. It's covered up, so. And there's a high probability we take out either the overnight high or low. Of course, that's why I was heading south, because I was shorting into the overnight low, but instead I got the overnight high. Notice where the liquidity is resting in the book. So what I need to be thinking about is settlement and the ETH high as a target. So if you took a long here, you'd be getting risk neutral, job number one, right? Your stop would stay under here, and then you're looking for this statistically. And in Trader Lab, notice where we come. So let's look at this from a few angles. First of all, the breakout here is a long. There's your support. So you got support there. You got now support here. And your stop can stay under here. Right? Comes back here. You can be adding it here. Your stop is under here. Right here, you would get taken out. And look where we come. Come all the way back here. Variable high volume node. Very tricky trade, by the way. This, when we broke here, this setup, I was looking for shorts. I get this. Just real messy. This is not my trade. I did not, I'm just sort of looking for the longs. Then I get this kind of thing. I get taken out. And it looks like now we're going to get our, the short to fall out the bottom. And what do? We come down here. So I'm having a very hard time with this. If you're not having a hard time with it, then, that's great. So I'm having a hard time with this because I'm not getting my levels or these targets, at the time. So, and when I break here, this says possible that we're going to come across and come back here as soon as this breaks. So this is a potential short. And right here, we also have a trade in the Trader Lab called VWAP to VPOC. So in Trader Lab, this could be a long to here, and then you're going for overnight high. Or you're looking at this. Now, when I was looking at this, I did not take the long. Just me. And I said, yeah, this is a Trader Lab long here to here, but I was disturbed. I'm disturbed by the condition of the market. I'm disturbed because of this. I'm looking at the profile and it looks like a mess to me. There's no symmetry to it. It's just a mess. So I'm looking at this and I'm not getting good information off of the profile, which doesn't happen too often, but it's just not behaving in a way that I can interpret it well. So I did not take the long and I did not take the short. I just trying to figure out what's going on here. So for me, I was having a very, very difficult time. And when I have a difficult time and I start going, is it a long, is it a short, who's on first? At that point, I just wait because then my plan and the current condition of the market are not in alignment. And in the past, I've taken a lot of losses flipping around because I don't have alignment. So the idea of having a trade plan is to actually recognize the conditions that are in alignment. And for my trade plan, I don't have alignment now. I have a toss-up. It could be either side. So for here, I know this is support, and I know now this is resistance. So that could be along to there, and you're looking for out the top, or you're like me, which probably most of you aren't. I get very cautious because I'm not here to trade for something to do. I'm here to wait for as much clarity and alignment that I can get so I don't just chop myself up. I'm not here for action. So I put the brakes on. So that's what I did. I put the brakes on. So this, I anticipated this to this. What I wasn't really clear on, for me, and clear means maybe, it doesn't mean anything more than that, was what's going to happen here. Am I going to get through here? So anyway, I was out of my long, came down here, and I'm confused because I know this is support. Now I have resistance. So I can't tell which side is in control. I really can't. And you can see it's both sides are active. So I did not have a trade here. But let's look. I want to explain that to you because if the market takes off, which it can, without me, and I'm not in it, I have to be okay with that because that's going to happen. Just the way this works, But I find over time the better way to trade is not to take that, not to be impulsive, but to anticipate the trades, to look for them. So now I get VPOC migration. So now this is saying too high and this is too low, and I'm right in the middle. What I'm seeing here is there's no consensus at the moment. It's battling. I'm interpreting this as a battle. So, and I, at this point, think it can go either way. Back here, looks like it's going to break down to me because this shifted down. I'm below here. So I'm thinking, okay, we're going to come out the bottom now. That's what I'm thinking. So the sweep, we had the low of the day is here. It's yesterday's low. I had this probe down here. I got a counter rotation. VPOC migrated down. I am thinking shorts again. Okay. And this is my support. VPOC migration. So right here, I'm thinking shorts. I get the migration and I'm looking for it to push out again. And instead, it does the opposite. It comes here. Once I'm back above this, then it's, I don't know. I'm back in the I don't know zone. Now I get VPOC migration. I pull back and hold it. This is supportive. I break high. I get VPOC migration again. I pull back. Now, too low. I don't know what's going on right here. I break here. I break high. This is potential support. Resistance is here. I break high. I pull back here. This is potential support, but I have my overnight high and then I'm looking to go higher. I will tell you that I was not participating in this because if I don't have location, I just don't do it. So I did not participate. And then the target now would be this. And yesterday, naked volume point of control. We get through there, then we can come back up to there. That's the next target is this, and maybe higher. Does that make sense, everybody? So that's me. That's my day to day. And I always say to you, you'll get the straight oil from the can over here. So I will not chase a trade because my job is risk management. So if this here, when I had this, I did know that this would be my next target. I chose not to take the trade. I just didn't take it. So, and it might be, I think part of it is psychological, you know, not being able to get in alignment with it until it was too far gone for me. So I didn't bother with it. So I have to be okay with that. Because I had this and I had this liquidity. So I was looking at this and I didn't get involved here. My next place to get involved would be over here, would have stopped under here, but I got this. So I looked at this and I said, no, the risk reward isn't going to work because if I get through there, though, I'm going to go here. So maybe that's the thing to do. I didn't do it. So I'm just telling you, because this is the trade. If you didn't get this, this is a trade. I chose not to take it. Look at this thing. I mean, this is so wild, isn't it? This suggests lower right here. Now this is scalpy. This is a short, but it's scalpy. And then you're coming here, you know, back to the mid, maybe the VWAP. And look at the buying you get here. Very volatile, very hard to trade. I think it's hard to trade, you know. So if I took a short there, I would be looking to come back here and possibly get back to the VPOC, you see. But where's the stops? Mid, VWAP, VPOC. So the mid is the first obstacle because you might get response there. So this is a decent short if right here. If that's in your plan. So this is okay. Okay. I didn't take it, but it's it's a trade for me. I didn't take it because I'm going to stream and I'm having some other things going on over here that are distracting. So I did not take this trade. I did not get the long, didn't do any of this. So I have not been really doing anything here today. So this is too high. So I have this sweep which suggests a rotation down. So if I come back up here to this volume over here, that is my resistance. I'm going to put a little line up here so you can see where it comes in. So this says this sweep and this volume with the break is a trigger saying a down rotation. This is your entry here. Why? Watch. I want you to see triggers. Now, there aren't too many days like this where I'm not pretty active, but today was not a day for me. So these are shorts, okay? Short, stop. If you didn't get here, we have another trigger there. All these are triggers. If you trigger here, notice the test here, then you get the wash. And then this becomes resistance coming back up, which, whatever it is, it is. So this is just like a short term, you know. So again, for me, there's nothing here for me. Other than that, fine. Resistance. Very choppy. Yeah, look at this. This is hard to trade for me because it's very abrupt and there's a lot of sweeps and a lot of nonsense going on. This here sets up a short, but it has to be part of your plan. Now, where are we? Yesterday's high. So you may not want to take a short up here because of this and yesterday's high. There's a good probability we can take out yesterday's high. So you might not take a short. This sets up a short or an exit. You don't have to be shorting it, but you might want to be thinking about getting out. So this sets up your short. There's your sweep. Here's a sweep. So this one says up, this one says down, but the fact we've been heading up suggests down to me. And now our volume is going to be up here. So I don't know when it gets to this, what's going on here. This is very hard to read for me. Just letting you know, just the way it is for me. And if I can't get a good position, I just go on to the next trade. If you're compelled to make something happen, that's FOMO. So this is our selling. Notice where our support is. We bounce back here. There's a microstructure right here. So you're below this. This is kind of the location. You know, you got pretty close. You see the seller here. And now you see your seller. If you're not, right here, it's not clear. Right here, you have your buyers. Break high, going up. Support is there. Resistance is going to come in here, which you don't know until you break below this. So let's kind of put a little line over here. So resistance, support, break high, break low. Notice where we come, resistance. That's a potential short if you want to be selling. And these are not my trades. So I just sit and wait. So it looks like what we've got here is we found too high, and then now we're coming back across to the outside edge. So it's really kind of a nasty trade here. So you could be doing, if this is your trade, this is a short, and it could be for you. And then you're looking at coming back down somewhere. I don't know how you guys are doing today. For me, it's just I don't get too excited about it. I don't necessarily trade it. This, I look at this and I could short it, but it's very mixed for me. Look where we are, the current high of the day, and we couldn't get over yesterday's high. So this is a real fight right here, if you think about it. We didn't take out yesterday's low. We didn't get into the gap, and we came up to this side. This kind of thought, and the reason for my short bias this morning was because to me this was checked and it was too high. So the fact we're back here is kind of mysterious, you know. But that's the way it is. So that's it. I mean, that's what I've got. Um, this is a rotational trade. So if you need a plan for this, I find this not clear um, because I have to keep changing my position here and try to trade. You know, right now, all we did here is we went, found too high and came down to the outside edge. This is mean reversion in this fractal. So let's see what it does. So if you're taking a short out here, I'd be looking out here. And if you can fall under here, then you can start working down. But this is the current area we're trading. And it's called mean reversion. Is everybody following? It's not an easy day, guys. Are you guys following? Yeah, LA, it's not clear, or at least it's not um, fitting well. At the moment, it seems now we've gone into rotational trade and mean reversion, so it's outside in trading here. But clearly, it seems like we might want to have a long or a rotational bias, so either a long or a rotational bias. So we are now trading this outside in, outside in. This is called mean reversion. Trader Lab, are you guys active in a trade mean reversion context at the moment? Are you guys trading mean reversion or are you positioned on the long side? Yeah, I moonwalk around with you on that. I think we might want to have a long bias here. So in Trader Lab, here's what you can do. Subject to your skill, you can be short from here out to here. This. When you see the absorption here and we break and we hold there, then it's really only back to this. It's mean reversion. It's very sloppy. And if the uptrend is going to hold, then we have the possibility to come back up here. But we need to be holding out here in this area. And here's why. You see this out here? This is called the low volume node. And low volume is an outside edge of a distribution. Now, the thing with low volume nodes to also remember is they're not strong structures. They're exhaustive structures, and there's going to be stops. In other words, they're outside edges of swings. So this, you want to remember this, and we want to be conscious of out here. So these are this is like a bracket of sorts of volume, and the market has a tendency to rotate around that volume. So certain trader, if you're in Trader Lab, your plan could be just to be getting long to come back to the high volume, which is up around here and here, and then to come out the other side. If you think we're going higher, then you're going to be looking for this. Okay? So we have to see what it does. So the trade fails under here, right here at this volume. And you can see the little microstructure there. So you have your chop chop. It's actually a little higher. See if I can move this. which who knows? So here we have absorption. We have our sellers here. Let me show you how you can use the microstructure. So this is resistance. There's volume in there. I break below it. I'm now, and you could see it there. So there, okay. So I know my sellers are here. My sellers are here, and I break high. As soon as I break high, these guys were absorbed, and this was my last area where my sellers were. I pull back. Right here is a potential long trigger, and then you're trying to come back around back here. This is a long in the Trader Lab, if it's part of your plan. This is a specific plan inside a plan. So let's talk about the plan. There's two possibilities, right? Let's assume maybe the trend is up, okay? So if the trend is up, subject to your specific individual trade plan, you would be prepared in Trader Lab for a couple of things. One is when you see the short, you use the short as a trade man, you exit, or you just get taken out on trailing stop, doesn't matter, because you see a short here. We have a short trigger. But then where's the other side? If you took a short, remember, this is where we're trying to go. If I come out here, and my naked volume point of control was here from yesterday, which is the fair price, it's possible I can come out here and check it. And if it's still too low, notice the alignment. This is my outside edge. This was my fair price from yesterday. And if it's too low now, I can come back here, mean reversion. So if you're short biased, if you trade both sides, which in Trader Lab, there are many who do, who will sell this and buy this. Or you get taken out of your long because you're going for this. You get taken out, you don't get the short, and now you're back here looking for the long. So this is a long, and now you're in alignment with the trend. So counter trend short or exit of long continuation trade, Trader Lab, looking for this and outside the top, wherever. Does that make sense? So this is the Trader Lab. Are you guys with me? So today we have to be conscious of this. Statistically, and since we didn't take out yesterday's low, just fun facts to know and tell, we have about a 64% probability, past performance not indicative of future results, of taking out either the previous high or low. So, and the preference, oh, I'm sorry, I'm giving you a wrong stat. Hold on. Apologies for that. An 85% probability of taking out the previous high or low. And 70% probability of getting there, which we did. So we have this high probability. So if you're in Trader Lab, you have statistics. Now, assuming you turn the tanker around, you'd be trading primarily the long side. This is the last long we have in Trader Lab as a structured trade. And then you're trying to come out the top because we have over an 80% probability for this. Doesn't mean it'll happen, doesn't have to do anything, but I would suspect there are sellers from yesterday who have stops above yesterday's high, and we have this. So there's a pretty good chance we're going to get here. It's not a recommendation, but it's a structure of the market. So if you're taking longs, you'd be taking them here. You'd be getting risk neutral ahead of your high volume. You'd have your stop under here, and then you're playing to come out. First of all, here, and then you got to clear this resistance right here. Do you have any questions on the long side and the rationale behind the long side trade? RP, yeah, we did touch it and it was rejected. So that means to me that we're going to take out the high, possibly. And the reason for that is if we touch yesterday's low and there's sell stops under yesterday's low and you don't get into those stops, even by one tick, that means the aggressors were at yesterday's low, and who's on the hook? The shorts off yesterday's high. So RP, that is why. Hope that makes sense. Thanks for the question. By the way, if you're in YouTube, remember these streams are available exclusively to Bookmap Discord Trader Lab participants, and there is no cost to participate in the Trader Lab community. And the idea, by the way, and I also recommend this to everybody, whether you're in Trader Lab or not, or just visiting, but I think if you're interested in a community it's all about the business of trading, it's not romper room. It's serious traders. Most of the traders here, whether they're newer developing traders or have substantial experience, they're here we're all together in the same place for the same reason. That's to get better. Also to differentiate our outcome from other retail traders by not doing what they do, but learning from our experience as retail traders. We've all walked in the same shoes. So it's what can you learn? What can you take from what you've learned? And are you repeating behaviors that don't have an edge, but have randomness? That is one of the things we need to deal with, I think, if you want to be in the trading business, is to kind of redefine the business for what it actually is, not what you might imagine it is. It's not just a conglomeration of indicators and time frames. It's a business of randomness, and we are looking for certainty, which is why we use a lot of indicators. And the term, if in your head, if you use the word confirmation, that is your emotions. You're looking for confirmation. And why do we want to confirm something? So we don't take a loss, so we can avoid risk. Isn't that true? Well, it may seem very subtle, but if you're trying to solve for confirmation, you're going to be curve fitting. If you understand there is no confirmation, then you're going to put your effort into a different place in this business. You're going to not put it into confirmation if it doesn't exist. You're going to put it into probabilities because those do exist. And probabilities are tangible. The random behavior of your indicators and the multiple time frames and our nature to load more on to create more certainty is actually counterproductive to the actual business. It's not aligned with the business. Instead, and the reason we look for certainty is because we're just going to trade indicators primarily. So when they cross over, something happens with a moving, whatever you're doing, or a VWAP or a VWAP extension or something, whatever it is, Fibonacci, pick them all. It's all the same. You can use tools, but you can't just put a whole pile of them together and think you're gonna have more. You actually have less because you have conflict and ambiguity and more randomness. So where can you take randomness out of the equation? You can take the randomness out of the inputs that give you a decision matrix, if you will. So the inputs should be anchored. And the comparison is to how casinos operate. They, like blackjack, they just deal the cards the same way, do exactly the same thing. And the casino can open up its books to blackjack. and they can see what their net is and what the percentage distribution or edge is for them to play that game. And as long as they have a positive expectancy, their job is to play the game exactly the same way. And yes, they will pay the gamblers, but the only way they can extract their edge is by paying the gamblers. So that's called cost of production and overhead. But what makes it tangible? It's because the inputs are anchored. So if you're doing exactly the same thing when a specific condition or conditions show up, you can then isolate that and measure it. That creates a tangible metric. That tangible metric allows you to function better in a random environment, same as the casinos do. Imagine if you're making it up all the time. How do you measure it? Why was the winner a winner? Was it because of your indicators, or is it just random? The market's random, so winners are random. You have no process and no statistical edge, you still have winning trades. That has to kind of give you a clue that you could be putting garbage in, garbage out, and have winning trades. So then what we do is we try to refine what we do, and this is human nature, and it's natural, it's logical, to make it better. So more tuning, more tweaking, more indicators, more certainty. Yeah, but it doesn't exist here. So the other side of that concept is then to not solve for certainty, to solve for randomness, which is edge. Does that make sense? Do I think we can take out yesterday's high? Yes, I do think we can take out yesterday's high. Do I think it will take out yesterday's high? I have no clue. I'm trading towards it because statistically, what happened at the low of the day? And if I know the longs didn't get picked at all, and we have all these gaps, and we couldn't currently get into the gap, then I know the probability, which is over 80%, I think it is, and you have to vet these for yourself, as we take out yesterday's high and we come back here. So I'm trading for that, and it doesn't mean I'll ever get there. That part, this is the casino again. I know probabilities. That's why I use statistics. I don't know anything more than that. So if I take the long here, looking for this and out the top, which is my trade, then I have to get risk neutral, and this trade fails under here. And if the trade fails, I take a scratch, and again, my broker comes to the house and hugs me. So right now, long only. And that's not a recommendation, because if I fall out of here, then I'm going to be back in the what's going on mode. And then I'm going to stand aside and wait for some clarity, at least from a contextual point of view. So right now, what we have currently is the following. Too high. Notice this guy was up here, just came in over here. Yesterday's high, high probability, and this has a probability also. So this was our target. This is why I was looking for shorts this morning. So I figured this was done. Might still be done. We may never get back here. Does anybody know? No. So until this structure fails and I fall out of this, I'm on the long side going for that and maybe higher. In fact, let's look up just in case. So out here, so if we get through here, I'd be going for this, but that's not a recommendation. So here I have to stay above this, and I need to come over this, and we might not. So right now, it'd be stop here, hanging out, and clueless, because I don't know. It's been really a difficult rotational trade. So that's what I have so far. You know, it's interesting. There are days that I think are pretty clear from an auction point of view. This one's been all over the place. But right now, the anchor I have for the trade is what we didn't do at the low of the day and that we have shorts in here from yesterday and they're vulnerable and their stops are over yesterday's high. So I have a fairly confident idea, at least enough to put a trade on. That's, that's as far as it goes, that this is on the hit parade. And then we have to see the stops. If we get up here, there's stops. So then it's going to be potentially pop, and then either that's the end of it, or whatever happens up here is not for me. All my trade is right now is from here to risk neutral to out the top. That's my trade. So that's it. And either if it fails, it fails. It's just trading, but there's no prediction. It's basically the conditions. And I use a process. It's a very simple process, and it's from when I was building trading systems. It's conditional statements. And a conditional statement kind of opens a path. If this, then that, then you do such and such. If not, then what? So for me, it was take out the low of the day. So if this, then that. If not, then what? Well, you don't know if not until there's a little space and you see the buyers. Once that happened, I had to be off the short. So if not, then what? Well, long. Now, where do you get long? Well, I got to have location and I have to have range to get risk neutral. If I don't have that, I don't get long. I just wait. There's trades all over the place. So I've gotten very patient. If I don't get a location, just me. It's not, I'm not saying that's the right thing for anybody else to do. It's what I find for me works well for me. I'm very allergic to FOMO. I don't want to chase a trade. I want to wait for the trade. I'm a little bit more, and I anticipate the trades. So when we come out here, I know what's here. I anticipate it. If I come out here and it's too low, I anticipate we're going to come back. Then the other side of anticipation is we can come back here and get the stops that are over here. So that's my trade. And if it doesn't do it, then it's just going to fall out. And then I'm going to scratch my head and go, I don't know. And then I wait because I don't have a trade. So right now it's longs from here. I would not take another long. If it comes down here, the stops are under here. If it takes it out, then we can go down and come further outside. We can come back out here. So we have low volume here. This is an outside edge for rotation. If I fall out of this, then I can come down here. This is another low volume area. That's right. Right there. And then I'd be trading rotationally. So I trade around the distributions. So think of the distributions like little connector things. Like here, this is an auction. If it's too high and there's the high volume node and I leave it, I'm now trading this. The outside edge is down here. If I fall out of this, I'm going to look over here and then I've got this. So they're separated. So right now, as long as I'm above this, it suggests rotation. If I fall out of here, then I can come to this high volume, which is sitting right there, and then I can come out here. So I know these, so I have these broken up so I can work in this. And again, if I fall out of here, then it's rejected this. And then everything kind of is up for grabs. It's like, well, now what's going on? But until it breaks, it's not broke. Does that make sense? Can you see how I'm breaking these distributions apart? So currently it is supportive of the upside. So there's not really much else that I can tell you about it. So if you have this trade on, you'd just be sitting here. There's nothing else you can do about it. Okay, we're breaking this consolidation, and we're still in our outside edge here. So we want to see if we get our buyers in here, because there's no, this is really kind of where it is. So let's see if we get behavior. It doesn't look like we got good selling now. So we're going to fall out. Very messy day, you know. This is good long. Outside edge. See, there's no range here either. If you were going to take a long, like here, this is where you got to scale. I mean, there's just nothing here. All we did was come out and test. So this. So the stops are right here. So if you're in this trade, if you're running your stop right up here, you're going to get taken out. You keep it a couple ticks below, you'd still be in it. But this just looks like terrible market action here today. So this trade I would take. This, no clue what's going on here now. Just not good action. Just seems it's very easy to get really chopped up in this. So I don't have a good feel for it. I mean, there are trades that are here, but it's very muddy. Let's see. We really want to watch this area right here and just see how far out it comes. Sellers are here. Buyers are there. Sellers are in control still. Sellers are here. Right now, buyers are here. We're out at our outside edge. So let's watch. And this is where you'd be going. There's no range. So for a mean reversion, which is what you see going on in the auction here, this is where your target would be. I can't trade it, so I can't do anything. So I'd sit here. I mean, I have to tell you what I would do. I'd be sitting here grumbling a little bit because I wouldn't really be making much progress today. I mean, if this could cross the VPOC, then you're looking up here, but it's not doing it. So that's what I got. I wish I had more for you today. This is not a good trading market for me. So I can read it, but the thing with it is like this, I can see I have some buyers here and this is my resistance. I've got no place to go. So let's watch it. So what I do when it's like this, I'm continually reading it to try to anticipate what it might do. I need my buyers up here. I'm not getting them yet. I do have buyers down here because this was absorption. So I want to see if I can get some buyers above here. I'm not seeing them either. There's a buyer. Just doesn't look good. Let's see if it gets back to VPOC. By the way, there's if you're in the Trader Lab, I should say you're visiting Trader Lab today in YouTube, there is a library of webinars and 60 PDFs of these trades. Now, the thing about the trades is when you have them, you got them. If they don't show up, you don't have them. These are actual trades, some are screenshots, and these are actual opportunities. Like right here, this is a long. This is the target right here. There's another long here. This is called the IB continuation trade. It's one that we do in the Trader Lab. It's right there. Let's see what else we have here. Some of these, and these are actual trades. You can see them, like here. Short, this is the IBF, it's called. It's a mean reversion trade. And what it does is you sell it and you're going there. That's the trade. So that's just from there to there, but you can learn that. And then this sets up your exit before it takes off. And this is not a trading course. This is just, these are actual trades. So, but you could get some ideas, and the idea at Trader Lab is for you to be in a community with other traders who are working on the same things you are at different levels at different times. So this is where we're trying to go. And leverage that experience and the work that's shared. The other part of this is that to understand that a different viewpoint of how to look at the business. You could trade any way you want. There's not a right way, or there's none of that. But you do need certain things, certain elements. The first one is a consistent approach that can be measured, not a random approach in a random environment. Think about it. Randomness in a random environment just gives you, what do they say? Garbage in, garbage out. You can't do anything with that other than gamble. So if we want to leave the gambling to somebody else, see, there's where the mean reversion is. If you want to leave the gambling to somebody else, you would then not do what they do. You would take your experience and everything you've learned so far and then reverse engineer take what works and get rid of what doesn't work. I don't use any indicators because I decided years ago that I wanted to understand this, not my indicator that maybe tells me something over here. I want to know what's going on right there, because I can make a decision and I can get short here if that's in my plan. I can get long against this if it's in my plan and I have the range, because that's my target. It's called mean reversion. You would learn that in Trader Lab. Now, the thing about this is this doesn't qualify because of range. But if this was out here and this was here, it's the same trade. In other words, the auction doesn't care about risk-reward ratio. The auction is about behavior. So if we understand market mechanics, how it works, then when the behavior matches, we can get involved. Out here is behavior also. If we come out here anywhere, that might set along up back to here and then out the top. We don't know, right? So we got to know where our trades might come. That's what this was to there, and that's what this is to here, which is not a trade. It's just a behavior. Does that make sense? And if you're interested in the downloads, those 60 PDFs, there's no cost. There's a link in the bottom of YouTube, and there is the Bookmap Discord Trader Lab community. So this is what's going on in the Trader Lab. There's a lot of conversation, interaction. Charts get posted. Let's see what's up here. So you're all welcome to this. 24 hours, 7 days a week. It's an international community. We have traders all over the place. And it's a great community. It's serious. It's not romper room. There's a lot you can glean from this. Also, see if I can get this in here. Maybe not. This is the library of webinars. And this one, the primer webinar, has over 30,000 views. That's kind of a high-level overview of this process. Then, day trading, fantasy or reality. Are you a trader or a gambler? Meet the Trader Lab, day trading, why most traders using indicators fail. Are you trapped in trader Groundhog Day? These are great. Winning the day trading game, Bookmap, order flow, and volume profile wins. You can watch these. There's no cost. Trading a gap in a trend day, advanced user session, psychological stuff. And this is just the primary stuff. And then I have these going back to 2022, some up to 4 hours, almost 5 hours long of real-time narration. If you want to see this in real time for a whole, full trading session, that you can also do that. Use the link in the, notice how we're holding this outside edge, low volume area. That's what sets this up. So remember where we're trying to go. Here. So that's the context. Whether you want to trade or not, it's up to you. But wherever you get long, and these are micro triggers, this is where you got to scale. I don't know about you, 1 point, not enough meat on the bone. So as much as I am looking for this, maybe sometime today or not, right? Because it doesn't have to do anything. This is a thrill of trading. I have to have a better location. So if it goes without me, I either will find another location to get in or I won't have a trade. Hope that makes sense. It's probably not what you want to hear, but that's, I think, how you stay in business. I've been trading 45 years. I will tell you, there are days I trade, there's trades every day. Okay. But if I can't get location, I'm not going to trade in spite of where it might go. Because over time, it's the discipline to wait for the trades where I have edge. I don't have good edge here. I have this. Now, I could be more assumptive and say, well, I'm just going to get long, and I'm just going to say, and trade to this out here. That's also very viable. So for me, I could take this trade, but for the stream, I'm going to tell you, I wouldn't take the trade. For developing traders, you should be developing discipline, not worried about, it's going to get away and I can make all this, because that's what you think. The business is really not built on that. So, remember, this was a long. All we did here is come out and pick stops and pick stops. This is what makes mean reversion difficult, because and I always talk about mean reversion, and I say, yeah, it's mean. Where's the outside edge? Which one is it? Is it there? See, is it there? Is it there? We don't know. Well, if I'm getting long here, I have to scale to cover my risk. If I get long here, that's my obstacle. As I mentioned to you, I can't take that trade. Because if I had to stop here, I'd be stopped out right here. How many of these would you want to take? Great question, isn't it? This is a long, and it's right there. I still have no distance, so I'd have to be incredibly nuanced here to buy a 26 quarter, and I'm getting 27 quarter, 1 point? It's not going to work. So that's why I can't take the trade. I can see the trades. Can you see the trades? YouTube and Trader Lab? How are we doing in YouTube? Please give a like, give a thumb up. Here we are. Now, this is what's interesting, I always find about trading. I mean, it's just one of those curiosities. You notice we had our long here. We discussed that. And we were looking at this, but problem with that. And then we're looking at this, and maybe problem with that, or maybe up to where? Here. And why are we trying to do this? We think the trend is up. We are outside the first hour's high. That's important. We are above the ETH high. That's important. This was yesterday's retail price. We tested it. It is now too low. Everything says to me north. somewhere. Now, where's the outside edge of this distribution? This is what we're trying to trade. This is the auction. What's too low? And remember, it's out here and it's also here. But I left this behind. So think of this like retail, too low, too high. Okay? So this is retail. If it's too low, and then I leave it, and now this is the new retail price, too high, too low, too high, too low. And then I leave it, too high, too low, too high, too low. And then I come up here, outside edge, and then here, too high, too low, too high, too low. Resistance. So I have resistance there, and this is my outside edge. So the idea of this trade is to try to get it outside. And this is not easy. Look at this. And then you're trying to come out here. And the reason is, here, I'll give you a little more ideas. This outside edge out here, there's stops here. So I know we can come up to here, out to here. So you could just trade it to here, but we do think, I do at least, that the shorts that are in here from yesterday are not going to be happy campers potentially sometime today. So I'm only on longs at the moment for me and going for the squeeze. That's the trade. Hope that makes sense. You getting something out of this? So the idea of Trader Lab, guys, we can't predict what the market's going to do. So we're not about that. That's for somebody else to do. You know, I mean, early on when we all start trading, we come in with an opinion and we think, oh, it's going to go here, it's going to do that. That's not the way to think, in my opinion. The way to think is it might do this, it might do that, and if the condition changes, I need to have a way of recognizing change, and then I need to have my trades that are already vetted, so I know where I can participate if I choose to. I can participate on this outside edge if I choose to, because I'm in alignment now with the trend, which is back up, and I know I have stops. Do you see the rationale for why I want to be long? How are we doing in YouTube? Is this making sense? And please give a like. And remember, there's a link in the bottom of YouTube. If you would like to become, join and participate in the Bookmap Discord Trader Lab community, you have an engraved open invitation. We need more traders in there to leverage and get better. The more you bring, it's not a debate about right or wrong. It's to share, because you will find this is a very lonely business. I mean, we're isolated. It's like you're under a rock somewhere. Have you ever tried to have a conversation with someone about trading? And even in your own experience, what you thought it was and what you now see it, what it is there a gap between the fantasy and the reality? Well, we cannot really share this with other people, and we can't discuss the challenges and the problems unless somebody else is an experienced trader. The novice traders have no idea what they're getting into, because we all come into this business with a fantasy, of what we think it is. Well, it's indicators and time frames, and then we have an ATM in the basement. Well, if you've been doing this for a while, you're going to figure out that's not the reality of the business. Then what is it? It is understanding how the market works, why it does what it does, how to get in alignment with it, and then using structured games, if you will, or trades, just like the casinos do, to participate to the next level. Does that make sense? How are we doing in YouTube? Guys, can you see the logic in this process? Can you see how if you put the time in to learn what this is? What is this? What am I doing? I am not using any indicators, so how can I do what I do? And by the way, whether you're using indicators or not is not the point. I understand how the market works, and I understand why it might do something, and I can understand where. No precision, but I understand. So when I was looking at longs out here, it was for this. So if you don't know why I was looking for a long at this location, you should be coming to Trader Lab. You should be asking, how does he know not what the market will do? I have no idea, but what it might do and where it might do it. Would that be something useful? If you're using an indicator, what does it have you doing here? Take a look at your indicator. Does it have, where does it get you long? I don't know. Does it get you long or does it have you short? Why would your indicator tell you to get short if the market's going higher and we have shorts on the hook up here? Would you want to be trading into those shorts who have buy stops up here? Or would you want to be joining the shorts who are offsides? Do you see what I'm saying? Is that something that is different for you? And if it is, use the link in the bottom of YouTube and come visit the Trader Lab. It has changed traders' outcomes. It might be able to trade yours or at least give you a different perspective on what this business actually is. I can assure you, Trader Lab is just not another chat, and it's just not another, guru. I'm an educator, but there's no course. Over the years, I've mentored and coached a lot of traders, have asked me, what are you doing? Because it appears what I'm doing is probably not what most do. And it's not. And it's not because the things that most do, I've already done. And I don't do them because they didn't work for me. They worked, and they all had winning trades. That I call, and I did that webinar called Trader Groundhog Day. You should use the link in the bottom of YouTube and come on over to our Discord chat and watch that one first, because that was my story. Working hard, getting excited, look at this, it's all working great, and then waking up in the same place. And you do that over and over and over again because you think your job is to find the right mix and the right tweak, and you have the screwdriver out in there and you're tuning and tweaking. So next time you'll get it. Well, what's next time? Notice where we are. This is the area, right, for a reaction. So here's what can happen here. We can come back here, or we just pull back and continue higher. This is called the auction. Interested in the auction? Come to Trader Lab. You can learn a lot about how the market works. So for me, it's language. So I decided no indicators, only because I wanted to eliminate or minimize, I should say, conflict and ambiguity. So for me, I know right here and right there. So all these are on the chart, right? And that this is my level. I don't know exactly because it's an area. But look where it came. That's pretty good, don't you think? And this is here before, and that's why I was taking the longs over there. This would be a long. There's your problem. If you took this, you might get stopped out. I always say keep your stop a couple ticks below, because what can happen is if we come down, 41 stops came out. That's what was under here. And if you come down, you don't want to have your stop here. You want it maybe 2 to 3 ticks under. And even then, you get stopped out, you get another long, you have to kind of tighten your belt up and follow your plan. We all take stops. Then you're going for this. And then you're holding, remember? Because what's the possibilities? We can come back here, or we can squeeze out the shorts. That's my trade. That's my plan. That's all I can tell you. Whatever happens, happens. This is gaming. This is the Trader Lab. If you're interested in this, you can learn it. You all have an open invitation. I believe anybody can learn to trade if they do the work. I believe if you come to Trader Lab, I can help you, and the Trader Lab community will help you. It isn't about me, it's about a community. This is much larger than any individual. I've shared structured trades to kind of give you the basis to accelerate your learning and understanding. There's that library of webinars. What I have found for me is the market is random. So what is anchored or consistent? It's me. That means I only do the same thing when it shows up because I have an edge. In between, if I don't have an edge, I don't do it. I just wait. There's a lot of trading days, and it's not about keeping busy or feeding FOMO. It's about longevity, having a business, building a potential career, becoming financially independent, working when you want, where you want. That's what it is. And if you are interested in that, you should come to Trader Lab. There's no holy grail. There's no secret sauce. Don't we all wish there was? I certainly look for it. I thought I found it so many times I can't remember, and that's Trader Groundhog Day. But there is no holy grail. There's no magic anything. This is trading. This is what it is. And if you want to learn how the market works, which is really the chassis, I call this the chassis. Everything is built on top of the participant behavior. There is no indicator. What is there? Price and volume. And then why does the market do this? Because it's trying to figure out what's too low, what's fair, and what's too high. What do we know about yesterday? Buy stops are above yesterday's high. That's the target. Anyway, I hope you got something out of this, guys. If you're in YouTube, use the link in the bottom of YouTube. If you want to visit Trader Lab, you do have to confirm your email address for Discord so you know you're not spam. And there's also a free digital version of Bookmap. If you'd want to download it, you can access that also if you come to Trader Lab, and of course the Trader Lab community. Come to Trader Lab, say hi, I'd like to meet you. Remember, there is no cost for this. And if you're interested potentially in improving your outcome, if you're not satisfied, I think the Trader Lab can go a long way in changing your viewpoint from what most retail traders believe to be true. We all walk in the same shoes. It's what you're going to do about it. Are you going to stay in Trader Groundhog Day, waking up in the same place no matter how hard you work, with random winnings? Because we all have winning trades. You don't need anything for a winning trade. You can throw a dart. Or are you going to maybe step back, take a deep breath, and say, you know, I'm tired of being on this Groundhog Day, waking up in the same place. I want something different. Next target's up here, and then potentially above. Not a recommendation. Please give that thumb up. Thanks for visiting the Trader Lab today. I look forward to seeing you guys soon. If you come to Trader Lab, I'd like to meet you. I spend a lot of time in there, obviously, and I narrate. I do not call trades. The idea is to help you understand how the market works, why it does what it does, how you can get in alignment with structured trades, build out a trade plan so you know what you're going to do. And then if the market aligns with your plan, you do your thing. And if the plan and the market are not in alignment, you change to a different plan that gets in alignment. That's what I had to do this morning. It's not a big deal. It's part of trading. You want to find out how to operate like a business and not a gambler, come to Trader Lab. I look forward to seeing you. Thanks again. Please give a thumb up on the way out. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, circle, arrow, build out your trade plan and your trading library. Thanks, everybody. See you tomorrow.